Hello and welcome to Lapping Analytics. My name is Jimmy Lapping, and in this video I present key transitions and trends in the gold price and a few common currency pairs from the start of 2001 till the end of 2025, which is to say a 25-year time window. Why gold? Well, because although quite a few people seem to think that gold is dead money, when taking a long-term perspective, the yellow metal has given some very good returns, and the same holds for the metal which is in the chart on the right, silver. Here you see a screenshot from earlier this week of the estimated price in euros of 1 kilogram of gold on the left and of 1 kilogram of silver on the right. Why in euros? Well, because the vast majority of videos on gold express prices in US dollars, and I happen to be based in EU territory, and although I do get some income in US dollars and also Swiss francs, most of my income and expenses are in euros. Luckily, there are websites that provide not only charts, but also a fair amount of numerical data of historical gold prices. For example, Gold Hub, which is mentioned here, provides users with a free of charge Excel file of historical gold prices all the way back till the late 1970s in a range of currencies. So I decided to use some of that data from that file to look at the monthly average gold price throughout 2001 till 2025. So again, a 25-year time window. And instead of expressing that price in a single currency, which is also in itself subject to volatility, yet usually gold prices are expressed in a single currency, I took the geometric mean of the price in a total of 4 currencies: the US dollar, the euro, the pound sterling, and the Swiss franc. Although there is quite some volatility in currency pairs, the long-term trajectory for gold looks very similar for these 4 currencies. And among others, we see that in the first 11 to 12 years of this 25-year time window, the gold price quadrupled. We then saw a considerable correction in 2013. I sold at the very start of that year and re-entered only late 2014, which was a good choice because we've had another time window in length similar to the first one, in which the gold price has quadrupled. The question is now, what is going to happen next? Now, it is important to mention at this point that this video is not to be used as investment advice. I'm simply providing a historical view of numbers to provide an example of how one can do one's own research to make more informed and personal decisions, because in the end any investment decisions are personal decisions. No one should make them for you. Having said that, the question what is going to happen next is an interesting one. On the one hand, given that we have had another quadrupling of the gold price, one might wonder if a correction is near. And there are parties that have called for such a correction, although some of them did a year ago as well, and look what happened to gold since then. On the other hand, there are also enough experts who see clear catalysts for further increases in 2026 as well. So let us take a slightly different perspective. We can, for example, have a look at month-to-month differences in the average gold price for each of the past 25 years. And we can look at seasonal trends as well. When we zoom into the month-to-month differences in the average gold price for each of the past 25 years, we see 4 colors. Dark green, which indicates the 2 best years. Light green, which indicates not the best, but still overall positive years. Gray, which indicates more or less neutral years, meaning on balance relatively little change or more or less flat on the year. and red, which indicate years in which there was somewhat of a downtrend. And well, basically, we only see 3 red years. The previously mentioned 2013, which had quite a bit of a correction after a long run up, then 2015, sorry, and then finally 2021. Some might say that we have had 4 years, 4 good years in a row, so we might, for that reason, have a neutral or negative year now. However, when we look at 2002 till 2011 all the way through, we see 10 green bars in a row, indicating that a bullish or upward trend can last for quite a bit. Next, from a seasonal perspective, we see that especially January and February, marked in dark green, tend to be good months. From this point of view, if there was to be a correction in the gold price, one could argue that it is more likely to occur in June or perhaps June-July than in the beginning of the year. This is to say that even if the people who foresee a correction in the gold price for this year are right, from a seasonal perspective, one might as well expect that correction later in the year rather than in the next couple of months. And at least for now, January is off to a green start for gold as well. So from a technical perspective, it is not so easy to say whether a correction in the gold price in the near term is due. Although a common saying is that what goes up must come down, there is no guarantee that the gold price reverts to a specific level from the past. And what is expensive can get more expensive, and the move up can last longer than one thinks. Now, what fundamental factors are around that can tell us anything about likely changes in the gold price in the near term? Well, on the one hand, it seems that interest rates have peaked, or they peaked a while ago, and are set to go down further rather than go up again. At least that is the general belief at the point. Maybe at some point there will be some pauses, but in general you hear more sound of, okay, we will soon cut further, then we will raise rates again. So there is a trend, a tendency towards lower rates, lower interest rates. And in general, lower interest rates are positive for gold, as well as for metals like silver, for instance, meaning that increases are more likely than decreases in the gold price. Next, it is no secret that paper currencies have been losing value all the way and are likely to continue doing so. And some allocation in gold can provide somewhat of a protection against that slow but steady currency devaluation. Also, we continue to see old and new geopolitical tensions, which, well, generally increase interest in gold for safety as a kind of safer investment. And when we finally add the notion that several central banks across the world continue to buy gold as well, we have at least 4 fundamental factors in favor of higher gold prices. On the other hand, since gold prices are in the end expressed in currencies, when one currency, for example the euro, appreciates, gold in that currency can become cheaper, even if in other currencies it goes up slightly or moves sideways. Also, when there is a recession, demand for many things, including metals like gold, can come down at least temporarily, also creating a downward pressure on the price. And finally, if technological developments make gold less interesting, either through a larger than expected supply or because other metals become more interesting, well, gold may also see lower prices. Some argue, for instance, that at some point in the future we might mine asteroids for gold. Personally, that still seems far away, at least to me, but okay, I'm not an expert in the matter. Time will tell what's going to happen. In any case, from a fundamental perspective, so we see that we have a number of factors pointing in favor of higher gold prices. We also have a few factors which point in favor of lower gold prices. Which ones weigh heavier? Well, that is something everyone should value for themselves. Personally, I am inclined towards continued increases, albeit slower, rather than decreases in the gold price, but that may in part be because my outlook for the euro this year is not so positive. Mind that I am based in EU territory and generally, or at least most of the time, think in euros. More about that in a minute, by the way. But now, as a quick sidekick, has gold been the only metal performing well in 2025? Well, at the start of the video, I also mentioned silver, where we have also seen strong moves up. And here you see a summary of stock performance as a percentage of change, including dividends and capital returns through 2025, sorted by sector. The overview comprises a total of 72 large, mid and small cap stocks listed on the Amsterdam Stock Exchange, one exchange that I monitor closely because I am invested there myself. And when we have a look at the top performers in 2025, we see upright three industrial stocks with a more than 100% positive performance, two of which are construction stocks and one a defense stock. The latter is not surprising given the current geopolitical climate. And in that same overview, we also see a solid performance for the three main metal players on the Amsterdam Stock Exchange, two of which are steel stocks and the others in the critical metals and materials space. And a part of the basic material sector that has performed less largely operates in the specialty chemicals industry. There we have seen some clear negative performances because, well, the chemicals industry is one industry that has faced some serious headwinds recently. But the metals have been doing well, so gold is clearly not the only metal that has yielded positive returns in 2025. Now, whether we invest in a metal in one way or another, as I mentioned before, prices are expressed in a given currency. So in the remainder of this video, I also take a look at a few major currency pairs that I monitor closely, and I do so also from a 25-year time perspective. The first pair is what you see here, the US dollar to euro pair. Again, price indications are monthly averages, as I did before for the gold price. And what we see is that although we've had clear swings up and down, some of which I managed to use to my advantage, overall one can recognize a clear trend towards a stronger US dollar. However, having closed 2025, some might argue that for the past 4 years, that is 2022 all the way through the end of 2025, one can see a trend in the other direction. That is towards a stronger euro. As we speak, we are actually about here. So from a technical perspective, this is an interesting point because it is at the lower end of the old and the new trend. So if we see lower values, meaning a further appreciation of the euro in the course of the next months, that adds more weight to the recent trend, which is going down here, which would point at a stronger euro. However, if the US dollar bounces up from here, this recent trend may be yet another temporal swing within the larger trend in favor of the US dollar. In the news, arguments for movements in either direction can be found. Personally, I think that the upside potential for the euro is limited from here, among others because in times of geopolitical uncertainty, moves into gold and the US dollar are more common than a stronger euro, but I may be wrong and the next months will tell. Another currency pair that I've been following for the past decade and a half is that of the pound sterling versus the euro. Not in the last place because I used to travel to the UK and even lived there at some point for nearly 2 years and a half. The last time that this currency pair had a major peak in favor of the pound sterling was in 2015, the year before the famous Brexit referendum. Since that Brexit referendum, about halfway 2016, the pound has been trading lower by much compared to historical levels. Since that famous referendum, 110 and 120 have been, well, fairly useful rules of thumb to define the range in which this pair has been moving. For instance, when I moved to the UK around Christmas 2018, values in the lower 110s were common, making it relatively cheap to convert euros into pounds. However, when moving out in the spring of 2021, the pair had reached 117, making it a conversion from pound to euro favorable as well. Right now, we are in the upper range, upper half of the aforementioned 110 to 120 range. On the one hand, the pair has slowly but steadily been shifting away from that lower bound, so it's been moving away from 110. If that slow trend is an indication for 2026, we should at some point in this year see another test of the lower 120 area, and a break above that could open the door for considerably higher levels, first in the higher 120s and subsequently possibly the 130s again. However, we've seen a few years of a relatively narrow range in this currency pair, and without any clear catalyst, for now I see any moves to 130 as unlikely, at least for 2026. But again, time will tell. And finally, the Swiss franc and euro pair. This interesting pair has seen some strong moves in this time window that we are having a look at. So from 2001 till 2025, all the way through. And to start, in the latter part of 2010 and throughout 2011, we saw a strong appreciation of the euro versus the US dollar, but a depreciation of the euro against the Swiss franc. I saw this move in time to still partially profit from it, then sold the franc in the latter 2011 on rumors that the Swiss National Bank might try to limit further franc appreciation against the euro. And indeed, not so long after those rumors, we saw kind of a cap in place that defined, well, more or less 83 euro cents as the maximum value of one Swiss franc. Nevertheless, I bought Swiss francs in 2013 thinking that this peg or cap could, would not last long. I mean, but I had to wait for about 2 years, until January of 2015, when that cap was indeed no longer deemed sustainable, and the Swiss franc literally jumped up against the euro, which is where I sold my francs and didn't enter again at any point later, because I never considered that parity with the euro could be a long-term thing. And well, here I was wrong, as the chart shows. Since 2022, the Swiss franc has been steadily trading above parity, meaning that 1 franc values more than 1 euro. So yeah, since 2022 we've seen higher lows and higher highs, indicating an uptrend. However, for 2025, and especially for the period since April, the trading range of this currency pair has been relatively limited, pretty much between 105 and 108. We are currently in the upper range of that 105 to 108 area, and in my view, no technical indicator or fundamental factor is indicating any kind of reversal or of the slow uptrend. But yeah, I have to say this disclaimer, I may be slightly biased because although I do not hold Swiss francs anymore, I do get paid part of my professional services in Swiss francs, and well, a stronger franc means I get more euros per hour. So as for the other charts shared in this video, do your own research and value for yourself which technical or fundamental factors are in favor of movements in one direction or another. Having said that, thank you for watching, thank you for listening. I hope you find this video useful, and if you have any comments or questions, feel free to share them in the comment section below this video. Have a good day, bye bye.